Okay, guys, welcome back again to my channel. Again, it's still your boy, the Legend FS Academy. And this week, we just kick off the month of June. And last week, I didn't take any trade because I didn't see any setup. That is a lifestyle of a swing trader. So this week now, we will be focusing majorly on GBPUSD, WTI, oil, and USD chef. Currently I'm still short on USD chef, so I will be doing my analysis maybe probably, let's say, about 4 different pairs. I'll try as much as I can to make it brief. So first and foremost, I want to delete everything on my chart so that we can reanalyze and know what we have. As you can see, I've done my analysis on GBP but I deleted all these things. All these things, just it didn't take me like how many minutes to do all these things because I've known how to do it. So I will likely want to delete it because I want to show you guys what we'll be expecting next. First, let me quickly delete all my drawings and show you and let you know why I'm still saying the GBPUSD. There is a particular zone I'm expecting GBPUSD to get to because we still have a lot of spaces. We still have about 700 pips, 700 to 800 pips to go. So quick, first and foremost, let me delete this, and these are the I will talk on GBPUSD, and I will talk on WTI, which is the oil. Then I will talk on GPJPY. If you watch my previous video, it has played out. So I'll be focusing majorly on GBP USD, gold. You can see gold. I will also delete everything on gold. I will delete everything on gold because I want to reanalyze from the fresh so that you can be able to understand. Then S&P 500 also. Okay, these are the three pair I will be focusing on because this USD chef and the GBP they are no, and I'm not seeing any good entry for now for the week. But let's focus on the one we can get entry for the week as a swing trader or as a day trader. First, we have to head over to our monthly. Now we are on our monthly time frame. You can see that this was a very massive bearish trend. And you know that before we can do anything here, we have to check DSY to know what DSY have to say for us. And from our technical standpoint, from looking at DSY is still heavily pointing down. And if DSY can fulfill this, that means it will be a bullish one for GBPUSD. I've done my analysis on DSY. I don't trade DSY like I always say. I always use it to measure the other pair. So now DSY is giving us this particular double top, break below it, retest, and we are free to go. We are good to go, man. DSY is just good to go. There is no sign of reversal yet. Until then, DSY we are still typically bearish. So I always come to DSY to check, and after then I always go back to GBPUSD or Euro USD. As you all know, I don't trade DSY. I don't like trading DSY. So now we've seen that DSY is still pointing down, and we'll come back to the GBPUSD. First and foremost, what I want to let you know is that how to measure your key zone. First, we have one of the key zone here. First, there's a key zone here which the market later broke and closed above it. We have a key zone here. Is a resistance zone which has been broken. The resistance zone which have been broken. Another key zone that we can see is this second one here. This is my target. This is my target. Now that is why I said I'm looking about 700 to 800 pips. So yes, this is about 700 to 750 with where the market is currently. But I'm still expecting a pullback before I can take it. But that is why I'm not rushing on GBP So now what do I have? Let me quickly do my proper analysis and show you guys what I'm anticipating next for GBPUSD. I will be able to establish that GBPUSD is clear to the upside, giving me this formation of, will I say, is the triple bottom, first bottom, second bottom, the third one, and it broke above and closed. It broke and closed above it significantly. That means we are cleared. There's nothing on Euro USD. Euro USD is not clear yet. There is still an obstacle holding Euro USD. I don't trade Euro USD, but sometimes I do check the trend. I do check the chart of Euro USD, but I don't trade it. I trade here GBP USD instead because there's no point of me trading Euro USD and GBP USD since I know that two of them are same correlated pair. So I choose GBP USD over Euro USD. But what I'm trying to explain here is that Euro USD has not cleared yet, but GBP USD is cleared in the sense that it has broken and it has closed above here. So now what am I expecting next to do? Now, since I've gotten this information from the monthly, we can see that from here we have been in a serious bullish mode. The monthly, this is monthly candle, and they are closing. The closure of the candle is another thing for you to look, which I don't want to explain here. How the candle close is also an indication for bullish move. So the candle how it closes, and we have this massive engulfing. We have another bullish engulf. This candle just showed you a sign of bullishness in the market. So I don't want to dive into the candlestick analogy for now. That is not why we are here. What we are here is technical analysis for the week. So now I've gotten my information from the monthly standpoint. Now I'll have to head over to weekly. Weekly, we can see that the market is still quite very bullish, and the market has broken above here. Let me quickly go back to monthly and double up this thing so that it will not be line, because some people, when they finish watching my video, they will do this thing as a line, and they will be sending it to me on WhatsApp. Some people who have my direct contact, they will be sending it to me on WhatsApp. But I always tell them that, guy, this thing, make it as a zone. It's not a line. Any zone, anything you are seeing is not a zone. Support and resistance is not just a line, it is a zone. Allow you to accommodate a lot of this thing. So now I've make it as a zone. Now it's good like this because this is a zone, it's not a line. So now the market has broken above this particular zone here, and I am expecting the market to pull back, to retest. But for some reason, the market has failed to come and retest this particular zone here, and I'm still keeping my eyes on GBP. That's why I've not been able to get any good entry on GBPUSD, but I've been able to get entry on USD chef, because USD chef commit to my trading style. But GBPUSD, I'm still waiting for him to dip down to this particular zone here. Let me go to daily so that you can understand what I mean by that. You see that the market broke above this particular resistance zone. It broke above it. So now the market is now giving us this formation here. This formation market is giving us this formation here, which me I don't really like. I don't really like this kind of formation that the market is giving. So I want this guy now to retest this. There's what we call proper testing and improper testing. This guy came here with a wick and shied off this particular zone. He didn't test it. So without testing it, I consider this as an improper tested. Like, I don't know how to say it, is improper testing or improper testing, because he didn't test this particular zone, which I'm not comfortable with. Because when a zone is not tested, best believe that sometime the big guys may want to come back with a week to come and test that zone properly. So I've seen a lot of this particular scenario. So I'm not fully comfortable with this particular scenario here. So now what I'll be anticipating next for is for this guy now to come back. We have a trend line here. We have this trend line has been here for long. We have a trend line here, eh? A trend line here. Let me adjust it properly. We have okay. Now we have first touch, second touch, third touch, and if you are expecting this particular guy, I'm not expecting this market to pull down to this particular trend line again. I'm not expecting it to do something like this again, because it's likely impossible. But in trading, eh, you will not say it's not possible. But I'm not expecting this guy to come back here. Do you know why I said so? Why I said so is that the market has given me another low here, eh, which if this market come and break this particular low, eh, break this particular counter trend line, this cold trend now, that means I will adjust and reanalyze, because the market has now invalidate all the setup. So but the market can still come and touch it, trend line with a wick, but it should not go below this particular zone here. This particular zone here, if you know, you understand what this particular zone mean here. So I'm not expecting this guy to come and to get to this particular trend line, but it can get here, get to half of here, but it shouldn't come below this particular trend line here. So these are my area of concern. This is where I'm keeping my eyes. This particular zone, this particular trend line is where I'm keeping my eyes. Then if I should pull out my fifth zone from swing low, eh, from swing low here to swing high, you can see that where the market, if you don't know how to draw a fifth zone, from swing low, where the market started the move from, and where the market stopped, before it start coming down. So it started from here and it stopped somewhere here before coming down. You can see that this is my, let me delete this so that it will not just uh, look somehow. So you can see that I have my 0.5% in the middle, I have my 0.618, the downside. These are the golden zone, Fibonacci golden zone, which we know. So I'll be expecting this. I'll be expecting a reaction inside here. If this market can come inside here, this will be a what I call a area of high confluence. First, we are having Fibonacci inside here, inside this 0.5 and 0.6. We are having this particular break above resistance that is coming back. We will have what we call break and retest. That is second one. Trend line, third one. Fibonacci 1, break and retest 2, then trend line third. And if you watch the GBP I called last week, is it last week or last 2 week? I did the same thing on GBPJPY, and I said that GBPJPY, once the criteria is fulfilled, that GBPJPY will buy. And I missed the trade because I wasn't active then, and GBPJPY came down to a particular zone and give me that kind of candlestick which I want, and GBPJPY bought from there, but I missed it. But that is, by the way. So the same thing is presenting himself here now. If this happen, we'll be having a 3 confluences to go long from here. First, the Fibonacci. Second, the trend line, and the third one is break and retest. Let me take off this particular this thing. Then, if you're a day trader, there's what we call counter trading. I don't really like counter trading. I don't like it. But for you not to be wasting all these people, because these people should be around 100 and something people from here to here, you see, you should be around 100 and something people. If you're a day trader, you can capitalize on this particular move here to here. But let me go on 4 hours to show you why. So now on this particular 4 hour, and we have this counter trend line that is holding the market all the way from here to here, from here to here. This is just a minor trend line. The moment the market gave me this formation, when I saw this formation, I knew for a fact that the market doesn't want to go high again. So, and the market broke below this particular trend line, broke below it, closed below it, and now the market is about coming down. So as a day trader or as a scalper, that you want to quickly take advantage of this particular move now to here. So what you have to be doing is that, let me go to 1 hour. You have to be waiting for this zone to be taken out. If the market is able to take out this zone on 4 hour close, 4 hour close below this particular zone here, you can go short. And be very careful, because the market can just get to somewhere here and rally up. That is why I don't like taking counter trade. I like riding with the trend. So now let me go back to 4 hour. I just came here to show you something. So now you'll be waiting for 4 hour close to close below this particular week. This particular week, the market left. If you can have this candle that is forming currently, if the market open, if you have another bearish candle engulfing this particular one and closing below this week, you can take a quick sell. And once you take a quick sell, your stop loss should be somewhere here. Ideally, you can just do something like this. From here, you take a quick sell. Your stop loss will be above this particular week. If the market open and didn't come back to inside this trend line, no. If the market open and the next candle come back inside this trend line and close inside this trend line, don't take the trade. I will consider it as a fake out. But if the market could not come back inside this trend line and is sustained below this particular trend line, that means you are good to go. You can take this trade. Your stop loss will be above this particular last week here, and you can target this zone. But the moment we can target this zone, the moment you enter, the moment your trade enter profit, quickly lock your profit and move to break even, because this is a counter trend, and I don't like taking counter trend because it's dangerous. I like flowing with the trend. So, but if you're a day trader or a scalper, you can quickly take this. For example, the way I normally take this kind of trade is that if I'm managing a prop account, I wouldn't want to take a counter trend on it. But if I have money in my own account, like if I have spare money in my own account, I can quickly take this counter trend with a high risk to capitalize on this move. But that is another risk management, a different ball game together, which you have to learn and study. I don't know when I will really dedicate my time to teach all these things, because a lot of all these things, risk management and how to manage profit account or a personal account, a lot of newbies need to understand this factor so that they can trade profitably. So this is what I have for you guys on this particular GBPUSD. This one, it will not be a nice trade for me. I will not be taking it because it's 1:1. It didn't even get to 1:2. My trade principle states that it must get to 1:2 at most. I must have 1:2. But as a day trader, if you have your separate account, you can take it on your separate account. 1:160, 1:166 is not that much small. So this is what you'll be capitalizing. So let me go back to daily. So on daily, we should have something like this. Let me delete all this one quickly. I just want to show you for showing sake. Let me delete it and then and show you what I'll be expecting on daily. On daily, I would like this market now to just commit, move back here, eh, move back here, maybe play around here, then something like this, touch this trend line and fail again. This is when I can now start. Okay, my overall target for now will be somewhere here, which is that about 700 pips to go. That is why I'm not even rushing. That is why I'm not even rushing GBPUSD. I'm just giving it time to flow. It's about 700 pips to go because I'm a swing trader. I'll be waiting for everything to align properly. But as I'm waiting, I'm also keeping my eyes on this particular zone here. I don't want the market to, if anything happen and GBPUSD close below here, that means I will have to reanalyze and re-strategize. But for now, I'm still heavily bullish on GBPUSD. So with all that being said, enough of GBPUSD. Let's quickly head over to WTI, because that is where I'm seeing another setup for the week. WTI, there is not enough. We don't have to do any analysis on WTI. We don't have to delete this. We can see clearly from here the market has been collapsing. And one of the things I want to call your attention on WTI is that WTI can use five moves to rally and use 2 days to crash. And with the news I read about 2 weeks ago, Donald Trump said he wants WTI to crash to about $22 per barrel, about $33 per barrel, something like that. I saw the news on Goldman website, a website that was where I saw the news, if I'm not mistaken. I couldn't get the screenshot. I would have just posted it here so that you can see it. But what I'm just saying is that WTI is still heavily bearish. This rally that it was making was to come and just fulfill this zone here. So I will be keeping my eyes on anything from here, anything from here. This is what I'll be keeping my eyes on inside here, because we have this fair value gap here. All the way from here, we have, this is a supply zone. You can see that I also indicated it here by this my boss here. It's a supply zone for me. I don't want to put anything here. I just put this thing here to let me know, because sometimes we may forget as a trader, you may be carried away. So whenever I see this red box here, I will know that this is a supply zone. This is a supply zone that caused a massive dump, um down all the way here before the market start reversing. So ideally, you don't want to be playing with this such a supply zone. This is not a zone to take your eyes off. So now that is why I put this my red box here. So I will be waiting for, is there that market can, because this is a support zone that was holding this market before, that later broke. Now a support broken become resistance. So now when the market got to this resistance, a lot of people will start selling. They will just see maybe bearish engulfing candle on this resistance. They will start selling, which is very bad. I don't like it. Let's say, for example, now the market just go like this. As the market is moving, you now see a bearish candle, a bearish engulfing candle like this one now. I don't know what is wrong with this part. Let me delete this one and do another one. I don't know what is wrong with that part. So you now see maybe a bearish candle form like this. You now start, a bearish candle now form here, you now start selling. You now start selling, maybe a bearish candle form, you now start selling and engulf this one, you now start selling. Some, you may be right sometime, but 90% of the time you will be caught, because all this area now is classified as a stop loss run zone, a liquidity zone. So the market can just do something like this. Because why they will have to create this pattern, because they know that this is a M pattern, which is a reversal pattern. So you seeing this pattern, that you'll be, the market wants to start selling. So they will not do something like this, and push it down all the way from here. This is how the smart trader, this is how they work. So once you understand this particular principle, I did a video on that, understanding how the smart trader work. You can do well to go and watch it to have more understanding about how these guys work. So now they will create this pattern on this particular zone here, then fake it up, then fake it up to the upside, then drop from the upside. So this is what I'll be expecting on oil. I would not be interested to sell from here. I'll wait for the market. Is it that the market, once the market take out liquidity, once the market do a stop loss run, then I'm good to go. The same way it did here. If you check on 4 hour, you will see that it did the that was the same way, that the same thing he did there. The market when the market move all the way from here, we have this particular this thing. By then everything is clear. That is when the market dump. So I will be also be expecting it to do the same thing. Not on here. If you do it here, I will not be interested. I will allow it to go, not until I see a liquidity sweep, which is a stop loss run somewhere here, or somewhere inside this particular supply zone. That is when I will be interested to sell oil. And you also know that at any given point in time, oil have the potential of dumping than buying than rallying. Do your analysis and do your fundamental. Oil can use 1 year to rally and use 1 month to dump. So that is why a lot of traders, a lot of fund managers, they are always shorting oil. They are not interested to buy. They are always shorting oil. Every single opportunity they see, they want to go short on oil, because oil has the potential of dumping, just like as gold has the potential of buying. So enough of oil. Let's quickly go to gold. Gold will be the last one. Gold will be the last one on our list. S&P 500 currently at the moment, there I don't know, time will not permit me to do S&P 500 because I don't want this video to be too long. Then gold now, from our monthly time frame, I did a video on gold today, but unfortunately that the voice is not clear. The video, the audio of the video is not clear. I explained all these things, everything here, but I couldn't upload the video because the voice is not clear. You would have just have the more deeper understanding about after ranging breakout. I did a video, but quite unfortunate that the voice is not clear and I couldn't upload it. So that is why I'm just let me just do a quick rundown of gold. Gold has been in an uptrend ever since then. There's, let me check whether I can have my chart back on gold. I don't think I can have my chart back on gold. Okay, no, no, no. It has been deleted. It has been deleted. So now, what do I have? What do I have on gold? Gold. Let me quickly go over to monthly time frame and see all monthly time frame. The more, and you know that gold. There's one thing I said in the previous video I did, but I couldn't upload it. Gold love round numbers. Round numbers. Gold love round numbers. The moment we got to 3,500, gold started falling. If you check, once gold got to a particular round number, gold intend to start ranging or doing whatever it wants to do at that particular zone. So the next prediction for gold is 4,000 per ounce. 4,000 per ounce. So that is the next prediction for gold. This 4,000 per ounce, gold will not just get to this 4,000 per ounce. It will take some time for gold to get to it. And remember, for every consolidation, I'm still very upset that I could not post this particular video on gold, because you have to understand more deeply. For every massive consolidation on gold, and for every massive consolidation on gold, eh, once gold consolidate for a period of time, and that duration which gold stayed in consolidating, we will also have the same period. Gold stayed here for about 3 years of consolidation. You know that we are on a monthly. Each candle represent 1 month here. So gold has to rally for another 3 good years before we can have another consolidation. The same thing he did here. This was about 6 years of consolidation, and gold broke out and made another consolidation again. So with the consolidation of this one and this one, it is not even enough for gold to keep on rallying. Gold still have, let me say, like, end this year and next year to get to this 4,000 per ounce. A lot of have predicted gold that gold will get to 4,000 per ounce. And I've did my analysis, I did my fundamental analysis, and I've said, okay, if possible that we can get to 4,000 per ounce. But currently gold, the moment the gold topped 3,500 per ounce, gold started coming down. So now, how are we going to trade gold? Since we've understood that gold still have a long way to go, then we come to weekly. The weekly, we can see that gold is still ranging on the weekly standpoint. Then we come to day. There is not much information on monthly and weekly. The only thing we can derive there is that gold got to 3,500 per ounce and it started ranging, and we are still expecting gold to still keep shooting up. As long as there's uncertainty in the market, gold will still keep on rallying. Right from the onset, right from the very beginning of gold, you know that the direction of gold, it has always been up. So every retracement made on gold is to create another new high. So you don't expect gold to just keep rallying. So that is why I'm just classifying this ranging as a temporal movement to rest this particular move, to just rest this particular move. So after this consolidation, best believe that we may get to 3,700 or 3,800 before getting to 4,000 per ounce. It will not come easily, and it can come easily. So nobody can predict what the market will do accurately. You can only use with the data you have available to you at the moment to predict what will happen next. So now we've gotten the information on gold. Then we'll come over to our daily. Daily is where we can do a deep analysis on gold. Then on daily, I can be able to pinpoint this particular zone here. This particular zone, these are my key zone. Let me quickly adjust this particular one here. Eh? These are my key zone. These are my key zone on daily. Then ideally, I would like gold to fall below. You can sell for a moment on gold, but I don't like selling on gold. Why I don't like selling on gold? I like to be in a buying position on gold. I don't like selling gold. I don't like shorting gold. I like to buy gold. So now on 4 hour, we can see that even before I was expecting gold to come back to this particular zone. When I took my buy from here, I was expecting this particular zone, but it will not be easy to just get to this particular zone. But that is by the way, I just closed those trade. So since gold has broken this particular trend line, so now what I'm suggesting, or what I'm seeing, or what I'm hoping for, is gold to get to this particular zone here. This was what we call inverse head and shoulder. um Inverse head and shoulder. Now gold broke above the left shoulder, right shoulder, the head. Gold broke above this particular head line. It broke. E left all this space here, but it came back with a wick to come and fill this space, and the moment e got here, e shoot up. And I still see this, and this retest was not properly tested. So now I am thinking that gold may likely want to do something like this, um then fall below here, then give me chart pattern. Gold love chart pattern a lot. If you are trading gold, always watch out for this chart pattern. Gold love this kind of chart pattern a lot, a lot. E give it here, something here again, something here, something here, something here. Gold love chart pattern a lot. Before gold will do, it will give you a full print that I want to move. So now that is what I will be waiting for gold to just bleed. This two candle as close outside this counter trend line. So now people who wants to go short, as the market open, be very careful on gold. If the next candle could not go back inside here, this breakout is valid. Then what you have to wait for is just a wait for maybe a pullback and a continuation to this particular zone. Then you can take a short on it on your personal account or your proper account, but just use the lowest lot size if you are trading sell on gold. Because gold, as you know, that gold has always been in up right from time. So I prefer to buy than to sell. That is my stand on gold. A lot of big traders which I know, which I don't want to call their name, they like to buy gold. They like to buy gold than to sell gold. And they like to sell WTI than to buy. They will not be interested to buy the WTI oil, but they will be interested to sell. So that is the idea about all these trades. Some people like to buy this and sell this. Some people like to sell this and buy this. To me, since I've followed so many of those professional traders and I've seen the way they trade, and I've done my analysis, I've known that gold has been in up. Gold has been in up. That's final. So I keep to my analysis and to my strategy that I will always be in a better position when I buy. And the few times I've traded gold, I've always been in profit. The few times I've traded it on buy, because I'm not a fan of gold before, it is because the way the market started misbehaving. That is why I now shift my interest to gold. I'm not a fan of gold because it's too volatile. It can destroy your account at any given point in time. So if you don't know what you are doing on gold, please stay away from gold. Don't trade gold until you know what you're doing on gold. So that is what I have for you on gold. If you want to sell, wait for the market to come back here and fail to come and close inside this particular trend line. That is when it will now show you that this breakout is valid. So then on seeing this, then you can go short. Then once you go short, make sure you take out your position the once you get to this particular zone here, because this is the next zone that I'll be keeping my eyes on. So once gold gets here, we'll have to watch for what it will do next. If I see a ranging the way it did here before, I will take a quick buy and to target this 3,500 per ounce until gold this 4,000 per ounce. We don't know when gold will fulfill it, but will it get here? Definitely yes, because the rally that has not been completed yet. The rally has not been, gold stayed for like 3 years before it broke out. Best believe we'll have another more 3 years before gold will consolidate. And if gold wants to consolidate, it will take more year to consolidate, because there's this analogy in forex trading that if a this analogy states that, let's for example the market stayed here now. Let's say the market stayed here for let me do this one. Let's say for a weekly we have this particular this thing here. um if you study your course on baby pips states that the moment this particular neckline is broken and closed, e says that the same duration this market stayed in forming this pattern will be the same period this market will use when this market broke out. Some people may understand this if you study your baby pips or other website of where you learn when you learn the basic of forex. So the same period e stayed in forming this pattern will still be the same period it will use to rally. So that is why I say gold has not yet complete his rally, because he stayed for 3 years in consolidating. So best believe that we have another 3 years or 2 years at max of rallying. So gold will temporarily fall before it buy again. So this is what I have for you on the S&P 500. There's not much thing on S&P 500. I have my this thing intact. On monthly, you can see. Let me just quickly do a rough analysis for those who trade S&P 500. S&P 500, we have this particular morning star which has been confirmed, which has been I said this before that I'll be waiting for this candle to close, and the candle close and it has been confirmed to us, and we have another bullish month forming. So let me just quickly go back to daily. So on weekly, the same thing, no much thing to do on weekly. So on daily, what I'll be expecting on S&P 500 is I want a pullback, a significant pullback, so that I can take a quick buy on S&P 500. So what I'll be waiting for, you can see that we have a break of this particular high here. eh the market broke above this particular high, so I'll be waiting for a decent pullback to this particular trend line to take another quick buy. Until that, I will still keep my eyes on S&P 500, WTI, gold, and GBPUSD. Those are the four pair that I'm keeping my eyes on for the week. So with all being said, I still remain your boy, the Legend FS. But please, if you like my video, please give me a thumbs up, and if you don't also like it, give me a dislike if you think I've not done justice to all these things I've said. But if you think I've done justice to all this analysis, please give me a like, and and press the subscribe button. And if you think I've not done justice to it, also give me a dislike. I will also appreciate it. But tell me in the comment box below what to do to improve in my next video. As you all know, no one knows it all. I'm here to learn. You are here to learn. Until we attain the level which I call the CPT, consistent profitable traders. I'm not totally there yet, and I know a lot of newbies are not totally there yet, but I know that we can grind together and grow together until we attain that level. I remain your boy, the Legend FS Academy. But please do subscribe to my YouTube channel. I will see you next week. Bye for now, and always remember to keep it super simple. Bye for now, guys.